So as I mentioned, we saw the number of deals down to 521 from 547, but interesting to note, we saw the deal value increasing. Is this a point that we're actually starting to see a lot of resilience within the market, despite the fact that the number of deals are far lower than what we've seen before?
The industry and sees that there is growth in the number of deals done and in the value of deals done. One needs to break it down a little bit, because included in that are a lot of smaller deals which are executed by one of the members of the association. But if you look at the number of large deals done, which is where the bulk of the money is, the deal activity is definitely on the up.
Okay, so when you look at investments overall, we know that there's quite a bit of activity coming through, buoyant outlooks for various asset classes, but there still seems to be a bit of caution in terms of how they invest and where they invest their funds. Are we going to see more caution down the line? I mean, one would think that we could see more reticence given the dire economic outlook on a global level.
The situation, if you look at the industry in total, of the 116 odd billion of funds under management, one will notice that approximately 35 billion of that is currently undeployed. That's a lot of money, and the industry is actively looking to deploy that capital. So my view would be that, notwithstanding the difficulties and all the uncertainty in the economic climate internationally and locally, the industry will be very active in seeking to deploy that capital. Part of it in South Africa, and part of it would be outside of South Africa.
Okay, so when you see investment activity coming through in South Africa, representing around 0.17% of the South African GDP, in the UK a number of 0.75%, and then Israel boasting the highest percentage, 2%, India the highest private equity contribution to GDP of 0.3%. Are we going to see more of a normalization occurring, where the BRICS nations getting more private equity investment coming through down the line, or do you think that this is sort of a fair mixture?
Look, it is a fair mixture, and I would say, unfortunately, the level of investment relative to our GDP doesn't seem to be increasing over a number of years. And I think that's one of the issues that we need to look at as a country in terms of our policy. Why is it that we're at a point in time when we have 35 billion of undeployed capital, the percentage invested remains a relatively low percentage of GDP? And you make reference, for example, to a country like Israel, and very interesting to note that over a sustained period of time, that there is a very clear correlation between the private equity and venture capital investment and the growth in GDP. It's absolutely clear that if we could raise our percentage of venture and private equity investment relative to GDP, it would correlate directly with growth in GDP.
Okay, what's also quite exciting, because of Regulation 28 changes in South Africa, it means that pension funds can now invest more into unregulated assets, private equity being one of them. We know hedge funds as well. How much have you started to see, how much appetite have you started to see from the pension fund industry? Is this now starting to increase? Because we know that there's a gap between investment and, of course, the knowledge and understanding the companies and understanding the investment and asset classes quite well. There's obviously a risk premium attached to this.
Yeah, so just a minor correction. It wouldn't be unregulated assets. It would be a different asset class, not to suggest that it's unregulated. But absolutely, your point is correct. If one looks at the capital which has been raised this year, one will notice that approximately 75% of it was raised from domestic South African sources, whereas over a period of time, only approximately half of our capital was raised from South Africa. Now, I think what we're seeing is the impact of the change to Regulation 28 starting to come through. I don't think yet it's at the level that it will be, and we will see a stronger an improvement of that in the years to come.
Malcolm, I would also like to touch on the very first number that's come through when it comes to number of exits last year. A very strong number, record 25.7 billion rand returned to investors. Successful exits coming through for 2011. Do you think 2011 was actually a good time to exit those companies in question?
It's not necessarily a question of whether it's a good time or a bad time. The way the cycle of funds works is that the private equity industry needs to return the capital to the investors within a defined period of time. So it tends to work in 5 to 7 year cycles. But nevertheless, if you look at it, it was a strong year for exit. The number, I have to say, is a little bit distorted, because included in that, as you will be aware, Brait changed its structure from a third-party fund manager to a proprietary investor, and included in that 25 billion is the exit by Brait of some of its funds, some of the assets in its funds to its proprietary investment. So it's a bit distorted. But nevertheless, having said that, it shows there's a lot of activity on the exit side. And very excitingly in relation to that is the performance. If one looks at the performance of the industry over a 3, 5, and 10-year period, you will see that the industry outperformed the Aussie Total Return Index.
Fantastic. So thank you so much for your time.